Hello guys, in this video we try to see 3 things to consider when you want to exit a trade, so stay tuned. Hello guys, my name is Abdikarim Ramain. I am your teacher and coach, and I see that a lot of guys have this major problem, and this major problem is when or how to exit a trade. So here I'm not speaking about investing, because in investing it has a lot of things, a lot of criteria, but I'm speaking about just in general, like short-term trading or swing trading. Now, the first thing to consider is your risk. Understand that even before you buy a stock, you should see where you exit if the trade doesn't work. Okay? And this is something very important in trading. Most of the beginners, I'm telling you, most of them, they have no idea about this thing, which is risk. Now, I'm not speaking about when you say stop loss, people, you know, they get frustrated, they don't like, they say, okay, I put stop loss, the stock goes down, then it goes up, so I lose money. Or if the stock is going down, I am not a loser until I sell, so I don't sell. These stupid ideas that are in the beginner's head makes them so difficult to understand the risk. If you don't know how to calculate risk, you will never be a trader. I'm telling you from now, and even if you stay 10 years, 20 years, 30 years, especially in trading. I'm not speaking about investing. Okay? Because investing, when you buy a stock, you don't buy it because of the price. You buy it because of the company itself, if it grows. Okay? So here I'm not speaking about investing, because the people, they always confuse themselves with investing and trading. Trading is just you buy because of some criteria and you sell because of some. So the first thing is what we call risk. Okay? You calculate your risk. You say, I bought it $20. Now, if I buy, for example, 100 shares, okay, where should I exit? Should I exit $9.50 or $19 or $19.50 or $18 or $18.50? It means from 20 where you buy, you should have an idea. Now, what is the risk if you don't put a physical stop loss? It means, for example, you buy a stock today, tomorrow you go to work, you can't check, or you didn't check, or you can't have access to your account or whatever, and let's say the stock has gone $5 down because of the news or because of anything. So if you buy at 20 and the stock goes to 15, so you lose $5 in that day because you can't see the stock, or you don't see it, or you don't put stop loss. 5% is 25% of your money. If you put $10,000, next day you find $2,500 is lost, and you might never get this back because the stock might go down more and more. Now here I'm not speaking about gap down or something. I'm speaking just about news of the day. It happens always. Without the earning news, it's not earning news. Okay? So, as I told you, the first thing is understand risk. Okay? When you understand risk, when you buy, you understand when you exit. The second thing I am talking about to consider is earning news. Now, why I always focus on earning news in swing trading, or what we call short-term trading, where you buy a stock for many days, many weeks, or many months. Why I'm speaking always about earning news? Earning news, you can have a gap up, you can have a gap down, so the risk is so big. So if you bought a stock, or before even you buy it, try to see where the earning news. Okay? If you are with 100% risk, you can hold the stock that you bought. It's your problem. Understand that earnings no one will know. This depends on the company when they announce the earnings, and depends on the traders. How do they react to things? Sometimes it's good news, you have a gap up, so you will make a lot of money. But sometimes they have a bad news and the stock will have a gap down and you lose a lot of money. So you should be okay with that. If you don't like it, you exit before the earning news. So this is the second thing I try to mention. Okay? Now, the third thing to consider is, for example, when you have profit. When you have a profit, sometimes the stock will be going down, like in a downtrend. You will see it because you see an uptrend, you see that stock is going, for example, for 2 months, but you see that your stock is going down too bad. So here, find an exit and just exit before you lose all your profits. This happens always. Okay? It happens always. For example, you stay 2 months with the stock, 2 months, you make 70%, you make 100% of your money. Sometimes it's good, you have a good trade, but this stock stops going up and then it's going down. And when it's going down, you see that each day, each week, it's taking a lot of money from your profits. So what you should do, just exit. Now we say I exit. Oh, what if the stock goes up again? Buy it again. So here you are always the winner. This happens to me with Apple last time. I follow Apple for 2 months or 3 months. Then it has a gap up. Then I sold in the morning. Now, when I sold, it was a good thing I have done, because after that the stock has been going down so bad. I could lose all my profits if I stayed on Apple at that time. So this is the third thing that you should consider. So all these three things gives you a way to understand risk and profits and dangerous things in your trade. If you focus on these three things, you will be a very successful trader. Thank you very much.